Yo, what is up, guys? Good morning and happy Friday. Today is February 11th, the last trading day of the week. It's been a very volatile week for me specifically. So far, doing pretty good though, up about $6,593. I did take a couple of losses, day trade on Cassava yesterday, as well as Tesla, and then potentially Affirm. Affirm went the exact opposite way that I was expecting after that debacle of earnings getting released on Twitter a little bit early. We can talk about that. We can go over Affirm earnings if you want, since we briefly talked about that yesterday. We're going to go over Tesla. I'm contemplating selling the last of the shares that I have. We'll go over why if you guys want. But before we get into it, guys, let me see who's here. What's up, Vincent? What's up, Free Speech? Second I saw the Affirm tweet, I tried to tell everyone to get out. Yeah, man. Their earnings really weren't bad. That whole debacle was a problem, but really not that bad. Across the board, I think they were up 77% year over year in revenue, which is good. Still taking massive loss from the company. Keith, what's up, man? Good morning. I'm Hernan. What's up, Hernan? What's up all day? Jacqueline, I think that's how you say your name. I'm so sorry. What's up? Hit the like button, guys, if you haven't already. I'm going to try to keep this one to like 20 minutes today. It's supposed to be 15. But yeah, comment. Let me know who you guys are and where you're from. Lane, what's up? Marianne, what's up? So we're going to go over Tesla. Not really moving the way that I want. On top of that too, just sitting here and not doing anything. So I'm thinking about potentially cutting. Maybe we'll go over some of the trades I've taken this week. I did actually close out a couple more here too. But we'll go over all of that. What's up, Des? What's up, Drazen? Cheyenne from Wyoming. Cheyenne, Wyoming. What's up? That's awesome, dude. It is so nice here in Philadelphia right now. It's like 64 degrees. It's not. It's actually 44, and I got my windows open, and I'm in shorts. But I think it's supposed to go up to 60. All right, let's talk about Tesla. Thanks for the live stream. Like it. Hell yeah. Thank you. Toronto. Multiple people from Toronto. Ted and Frank. What's up, guys? And Dark. Vancouver. What's up, guys? And the Netherlands. Dude, this is sick. We have global outreach here. All right, let's talk about Tesla. So Tesla rejecting here on this 11 EMA. Currently under 90. Looking at the 1 hour chart, still unable to break through 940. So yesterday, unable to break through 940, couldn't get through it. We've like tried to tap this thing like 5 times on this resistance point. In support, we've trying to bounce here at 890. So we still haven't broken through the resistance. We still haven't broken through the support. We're still just sitting here. I think I'm down like 150. So I'm contemplating just like saying whatever and cutting it. But overall, still holding. I'll probably give a decision by the end of the day. I tried to take a day trade on Tesla yesterday, ended up losing $607. So that sucked. I took 2 bad day trades yesterday. Afternoon from London. Dude, this is awesome. Massachusetts, California, Boise, Idaho. I hear Boise's beautiful. Toronto, Hong Kong. What's up, Kit? That's amazing. So overall, day trades yesterday weren't the best, but Tesla's just, man, Tesla is just not doing anything. Normally I would hold, but when something's not doing what I want it to, taking a position off the table is never a bad move. The biggest reason I'm holding though is I don't have a big position relative to my portfolio, but if we do snap 890, we will see a drop to probably 870, but realistically probably down to 826 because this is where that 200 SMA is, but it's still too early to tell. Looking at the S&P 500, because we can go over the total market as well. S&P 500 is trying to hold this trend line here. If we reject, which it looks like we potentially could, we will probably see a drop down to 445 on the 200 SMA. And if we snap the 200 SMA, we'll see a drop down to 435. If we snap 435, we'll drop to 420. And this is what I was talking about before. Like, I am always going to be a reactive trader. A lot of people, I feel, and you guys can let me know if you agree with this or not. A lot of people think that trading is predicting the future. Trading is not predicting the future. Trading is using past data to really use probabilities. Probabilities and predicting is different. What do you think the difference between predicting and probabilities is? Psychologically, I'm not talking about physically, like in trading, but like what's the difference between somebody who is predicting something or somebody who's just using probabilities? What do you think the major difference is? We talk a lot about psychology in these live streams, and it's one of my favorite things to do because I don't talk too much about them in the videos. What do you think the difference is? No wrong answer. Okay, this is actually going to be a better question. I want you guys to answer this. When you take a trade, do you expect to be correct? Every single time you take a trade, do you expect to be correct? Predicting is emotional. Kit, you're completely right. Ted, emotions, yes. Hunch versus data. Okay, so let me ask you this. When you take a position, do you expect to be right? Lim says yes. Predicting is subjective. So when you take a position, do you expect to be right? No, no. Probabilities try to be less wrong over time. 50-50. Of course. Yes, yes. Okay. You never, and it's not necessarily a bad thing, you never want to expect to be right. Right? You never want to expect to be right. When you're predicting something, you're expecting that you're going to be right. When you're using probabilities, you're just using the math. It's like when you flip a coin. You're not you're not expecting to win every time. Right? If I flip a coin and we know that it's going to be 50-50, right? It doesn't mean that I know the next four. So like, let's think of it this way. You have a coin, right? Just heads and tails. You mathematically have a 50-50 chance. Okay. Now, does that mean that you know what the next 5 flips are going to be? If we flip it 100 times, do you know what the next 5 flips will be? No, we have no clue. You could flip 5 heads in a row. You could flip 10 heads in a row. There's a very low chance, but you could flip 25 heads in a row. Or you could flip 10 tails in a row. Or you could flip 10 tails and 5 heads. This is why using proper risk management is extremely important. Because just because we know what the probability of a trade is, you could get like 8 losers in a row. Right? Because you don't want to think like, okay, there's an 80% chance of a descending wedge breaking out or a 74% chance of a bull flag breaking out. You want to use proper risk management. That's the biggest things. I have flipped 100 heads in a row. But when you're thinking of the way that I would say is that when you're looking at a prediction, you expect to be right. When you're looking at probabilities, you're just letting the probabilities play out. When I take a position, I never expect to be correct. I never do. I play with the data that's given to me, and if the data is correct, it's correct. Like I tell my mentorship students all the time, when you're trading, your goal is never to make money. Right? Your goal is never to make money. Your goal is to create a strategy and stick to the strategy over time. And over time, when you are going to be fulfilling that strategy, a winning strategy will make you money. Betting on Tesla isn't 50-50 if you're long-term. No, not at all. It's not at all, Mike. I definitely would not say that that's long-term betting is not 50, like it's not 50-50 at all. But I'm just saying if we had a coin and we were flipping that coin, even if you had like a 90-10 coin where you knew the coin could flip 9 out of 10 times, if you flipped it 100 times, it doesn't mean it has to be 9 in a row. Example. But looking at how probabilities and predictions play out, you just need to use probabilities because this way you will never be emotionally hurt if something doesn't go the way you want it to, which is extremely important. Like people mentally have a problem with being wrong. And it's nothing like we're meant to be that way. And so when you remove the emotion of quote being wrong or right, damn, I sold DraftKings too early today. Holy shit. Okay, never mind. So when you end up having a situation where you're wrong, like you should never make a situation for you to have that. You should never be wrong or right. You should always just end up having a strategy. You play the strategy and the strategy works or doesn't work over time, right? Your comment on creating a strategy is a light bulb moment for me. Exactly. Because here's the thing. Making money today or making money tomorrow or losing money today or losing money tomorrow doesn't mean anything. It doesn't. What you need to do is to create a strategy, right? Think of creating like a machine. Imagine like you're creating a machine that makes candles or something. I don't know. You know what I mean? your goal is not to like necessarily make a candle by hand today. Your goal is to work on the machine, and then the machine will eventually, holy crap, I'm so sorry if that's blowing your ears out. That's a trigger on snow. So I don't know if you guys can hear that. I think you can. So overall, your goal is to create a strategy and stick to the strategy. If you stick to a strategy and the strategy works, you will make money over the long term. And that's the most important thing. But going back to the S&P 500, looking at SPY, the reason I started talking about this is because when we're looking at the S&P 500, many people will say things to me, and they've been for like weeks, like hyperinflation is real. Fed is hawkish. They're doing an emergency Fed meeting on Monday now. Like, aren't you worried about the market? Aren't you worried about XYZ? I always say I don't pay attention to the news. I don't pay attention to CNBC. I don't care about what the Fed is doing. I don't care about most things. And some people can say, oh, dude, that's very thick-headed of you. But for me, it's like, I'm just going to use the probabilities of a chart, because 90% of the time, the stuff that we worry about in our life, not even the market, never comes to fruition. So for me, looking at SPY, I was worried when we snapped this trendline support and then we completely recovered. Does it mean SPY is just going to completely rip back up? No, we could definitely drop back down to 422. But if we snap 422, that is where I'm going to be extremely, extremely bearish, right? That's the most important thing. As well, looking at triple Qs and tech, you can see we came right back up to this resistance point, double tap 200 SMA and the point of control, and now it's looking like we may actually end up seeing triple Q potentially pull back down to like 342. So I do think we could see some weakness in the market going into next week, but across the board, I'm still pretty bullish. I still have a decent amount of bullish positions open. If we look at Tesla for the day, who knows what this orange line is here on the on this chart? Who knows what this orange bar represents? Love you, bro. Thank you, Chavez. Chavez, I think that's how I say your name. Anyone know what this orange bar means on this chart? Dark pools, yes. So $53 million worth of dark pool came through at 9:52. It was a block order. Do you think this was a buy or a sell? Right? A dark pool won't tell you, but do you think this is a buy or a sell? Dark pools, question mark. If you guys don't know what a dark pool is, go to our Discord. It's completely free. The link is in the description and it is updated. You can go to the courses and seminars section and there's a whole area on dark pools. Sell, 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 sell. All right, that's the FOMO line. Sell, sell. Yeah, it's a sell. And the reason it's a sell is because it was used as a resistance point. And you can see here, we came up, we tried to break through it, and then we pulled back down. So that was definitely a sell. Now, is $53 million worth of dark pools big or just average for Tesla? Is 53 million like a big deal for Tesla, or is, because I feel some people here like 53 million, the stocks should crash. Really small, average, average, average. Yeah, so overall, it would be like small to average. If we saw like 5 of them come through, that's pretty average. It's nothing nuts though. Like, you have to realize, like, it's really not a lot. So, but let's say it was like a firm or Wish or like something with a smaller market cap, it would be a big deal. So all of these numbers for dark pools and stuff are relative. Same with calls. We'll talk about Rivian a little bit too, because it is still down. All right, most active calls for the day. Tesla 5.78 million. Low average, but pretty low. Bullish flow for the day for Tesla right now, it's not even in the top 10, so it's sub 200,000. We already know the difference between most active calls and bullish flow, so not a lot of bullish flow for the day, not even 200,000. So of that 5.7 million, not even 200,000 is buys. And if we look at the heat map, you can see exactly why, right? So we'll briefly recap for anybody who is new to the live streams, but $5 million worth of calls, most active calls, but there's only $200,000 worth of bullish flow. Why is that? How can you explain that? Can anyone briefly explain that to me? How is there $5 million worth of active calls, but there's only $200,000 in confirmed calls, like buys, people who are actually bullish, $200,000 worth of bullish flow? Who can explain that to me quickly? Get a gold star. And you can tell by looking at this heat map, and we'll briefly explain that in a minute. Covered calls. Yep. sell to opens. Yeah, so Anil, free speech, you guys are right. Carson, so they're selling covered calls. So they are selling a call. So they are selling a bullish position, which means they are bearish on Tesla. So all of the calls in this C0 sell, these 885s, these 894s, these 905s, these 920s, and these 925s. These are all bearish positions. They are selling covered calls, probably as a hedge. I would assume that it's probably someone who has like hundreds of millions of dollars in stock and they're selling a hedge. All right. This is ultra gold star because I've never gone over it. You see this C1 sell right here on the $900 strike, 753. That has no color. What does that mean? When it doesn't have a color, what does that mean? Yeah, they're probably hedges, Lane. What is that 753 with no color? It's not green, it's not red. What does that mean? You get 5 gold stars. What does that mean when it comes in with no color? Market price? No. Okay, so that means it came in unconfirmed. So it came between... all right, I'll say it here. All right, I was going to ask. So it means it's unconfirmed. It came between the bid and the ask. So when you're looking at flow, the only way to confirm whether something is bullish or bearish is if it came in at the ask, at the bid, above the ask, above the bid. That's the only way to tell, right? If it comes in between, you can't really solidify that that is a bullish or bearish position. So any of these that you see here that don't have colors, these all came in between the spread and black box or trading ticks or flow algo or cheddar flow, whatever flow software you're using. They cannot confirm that that was a bullish or a bearish position. So yeah, it's a mid price. It's coming in between the spread, so we cannot confirm it. And being able to confirm it is extremely important. All right. So you can see that we do have some bullish positions, and these will come in under the most active calls. This is where the $200,000 worth of calls come through, but they're just not going to be confirmed. Alerts, nothing big. Looking at the flow, nothing crazy. Some 211s, nothing crazy to either side. You know what I mean? So really nothing nuts, anything crazy here that we're seeing on Tesla. Disney got some good calls. Affirm has $1 million worth of active calls. Nvidia has some good calls. Pinterest has some good calls, but really nothing crazy. Looking at Rivian, as we talked about this yesterday, some 211 puts came through, but those are closed out as of right now. No dark pools, nothing crazy. All right, let's talk about some trades I took this week, and let's talk about positions that I ended up losing on and positions I ended up making money on so far this week. I still have the rest of the day. I might close out some stuff. Up about $6,593. When did the week start? On the 7th. So on the 7th, since then I've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, and I have missed out on 2 of them for a pretty decent loss. 750 on one, 607 on Tesla. So I took a $607 loss on Tesla and Sava. Let's see, Snow. So Snow was a good position I ended up taking. We'll go over this briefly. So we had a really good setup on Snow. I ended up entering this position back here towards the end of January, but I closed it out on the 7th. So when I entered this position, we were down here at this support, and this is a pretty damn good example of some trades I like to take. What's one thing you notice about where this entry was? So I entered on this doji here. Where do you guys notice, what do you notice about this position? And why I would end up taking this is a very good example. And why I sold way too early. Holy shit, I sold way too early. And there's just got a buy order on this too. Just join the Discord. Hell yes. Descending wedge. What am I planning to do? A Qualcomm and Rivian? I'm holding both of them. We'll go over Qualcomm and Rivian both. So one thing you notice here is we have what's going on with this volume profile. In the meantime, I will remove this. So what's happening on the volume profile? So this is all the volume profile over here, these bars. What do you notice? What does that red line on the volume profile mean? Who here doesn't know what a volume profile is? Let's do that first. Maybe I'll explain a volume profile. This red line here on this volume profile. POC, point of control, support line, strength, volume, power of control, point of control, I don't know, support, explain, ascending wedge. Okay, so this is your volume profile. I have a fixed range volume profile, which means every single, it's set up for 1 year to date. Okay, so what these normal volume bars at the bottom of your screen show is the amount of shares that were traded within a day. What it doesn't tell you is where the shares came in. So it doesn't tell you what price people are buying at. These horizontal gray bars are it's called your volume profile. And where there is a wider bar means there's more volume. Now, this is not a trick question. Do you want to trade with volume or without volume? Do we want to trade with volume or without volume? Oh, I still have some coffee left. Does TOS have this volume integrated? Yeah, you just have to go to studies, go to volume profile. With. Yeah, we want to trade with volume because we can't move the stock, so we need big money to come in and move it. So what this red line shows us is the highest area of volume within that time frame, which this red point of control, it's called point of control, is going to be a massive support and a massive resistance. If we also zoom out to a weekly chart, remember, when in doubt, zoom out. If we go and draw a trend line support, you're going to notice that this is also a pretty big support, right? On IPO, the first couple of months, we bounced off of this support, briefly snapped below it, used it as a resistance. Old supports become new resistances, broke through the resistance, used it as a new support. So we have a huge support right here. Does anybody know what confluence means? When a chart has high confluence. This is like a little more advanced, but screw it. We got another like 5 minutes left. Does anybody know what high confluence means on a chart? High area of confluence. I see one no. Okay, so there are many different traders out there. Many different. And most people use one specific strategy. I know people who are flow traders and they only trade flow. They don't look at charts at all. They just trade flow. There are people who just trade point of controls, right? There are people who just trade trend line supports. There are people who just trade Fibonacci retracements or Fibonacci retracements and Fibonacci extensions. There are people who just trade 200 SMAs. There are people who just trade RSI divergences. There are people who just trade MACD crosses, right? So what a high area confluence means is it is an area where multiple different types of traders will step in, okay? So when all of these areas combined, it's called high area of confluence. So at the point of my entry, we have the highest amount of volume possible in the last year. Point of control, so that's one area of confluence. Volume profile traders will enter here. The other thing we had was a divergence on the RSI. We also had a potential cross. We were 1 day away from a MACD cross, so people who trade MACDs, beautiful. Big major area support, people who trade supports, beautiful. Flow traders, big money was buying the living crap out of this. Another area of confluence. So I know there's a reason for people to step in. It got beat to hell. We bounced off of 232, and this is where I entered my position, and we had a huge push up, and I sold at 290. Why do you think I sold at 290? It was about a 26% move. Why did I sell at 290? Do I always keep my volume profile at 1 year? Normally, yes. If I'm trading with like a 1 hour chart, no. 200 SMA. Yeah. So there's one other reason too, Alex, but that's a very good one. 200 SMA resistance, but there's one other reason, and it has to do with the volume profile. New point of resistance. So it has to do with the volume profile. You can also see here, guys, that at 291, this was a major support prior. So 291 is going to become a major resistance as well, like Carson said. The volume profile over here is very thick, right? There's a thick area of volume on the volume profile. That is going to act as a resistance point. So I sold when we hit 200 SMA resistance, major resistance, and also volume profile resistance. The volume is high, so it's going to be hard to push through. And of course, I sold way too early. Like, we ended up breaking through it. I saw this rejection forming here, and so far I've missed out on an extra 10%. And if Snow can push through 325, we're probably going to see Snow push back up to 370. So there is still some room on this trade. Now, gold star before we hop off. What would make me re-enter this position? What would make me re-enter the position? And like you said too, Sophia, it's a very good example, less volume. The next day on that rejection, volume was very slow, or very low. Okay. I see Nicholas, pull back. Okay, so pull back to what? All right, pullback. So I would need to see a pullback down to the 200 / that area of support, and I would need to see it hold, right? Think of, it's going to be trying to figure out a metaphor that would really help. But when you're watching supports and resistances, we're watching for confirmation. It's kind of like, think about, I don't know how to explain it. Maybe like Call of Duty or like a war game or something where you have these like objective points, right? You need to go and get the objective and then hold the objective before you go to get another objective. You don't just run and touch the objective, get the objective point, and then run to the next point. Like, you need to hold that point. And that's kind of how support and resistances are. We need to push through this like we have. Now I want to see this pull back down to 290 and hold 290. If we can hold 290 and we, confirm this point, then we can make a big move up. And that's what I'm looking for. Besides that, I also took trades on Melco. Melco is a phenomenal trade. Descending wedge, bullish divergence, resistance here at 1120. I played this from 930 to 1120. Could still run to 13, but whatever. I'm cool with that. Traded Snapchat earnings. Traded Amazon off earnings. SoFi. I've been putting this SoFi trade out on the free YouTube, the other YouTube channel, DeCarlo Capital, which you guys should go check out. Descending wedge. This thing can still push up to 15. But a lot of good trades. But the biggest thing I want you guys to realize is, like, I'm not always right. Like, big money is not always right. A great example of this for big money being wrong as hell is IAA. If you guys remember, I threw this out as a free trade like 2 months ago. They were wrong. IAA shit the bed on earnings. Down at 37, big money was wrong. Another one is Affirm. Big money was wrong. Affirm pushed up from 82 down. So big money is not always right. I'm not always right. But at the end of the day, that's why position sizing is so important. Because it's like flipping a coin. If we have a coin that we know is weighted, and the weighted coin will be a heads 83% of the time, you don't put all the money you have into the next coin flip, right? You have to end up using a certain amount that you have on those coin flips. It's really like the same thing with blackjack. Every single time I go to a casino, I usually walk away making money. And the reason I do that is because, number one, I'm pretty good at blackjack. But number two, it's because I never raise my bid, right? So let's say I walk in with $100, I'll play $5 hands. Because I know over time I have an edge. If I go in with $100 and I play a $50 hand, I got 2 hands. If I just get bad luck, I'm out of the game in 2 hands. So even if I turn that 100 to 200, I will maybe raise my hand size from $5 to $10 max. what I see happen is I see a lot of people do this stuff where like they'll just raise their position sizes massively just for the hell of it. I've been watching you for 2 years, dude. Nick, thank you so much. Even if you're wrong, it's only a matter of time before your thesis is confirmed. Exactly. And that's why I don't care if I'm right or wrong. I never care if I'm right or wrong. Even publicly trading, because you guys have to bet that when I'm wrong, I get some fucking keyboard warrior trolls with Cheeto fingers commenting like, oh, this one didn't work out, this one didn't help, or you didn't do this one. But I'm like, okay, well, where are you commenting on the 83% of the times that we're right? Like, but I mean, even at that, like, there's no pressure to be right or wrong. When you remove that, first of all, when you realize that that nobody who has ever done anything good with their life has Cheeto dust on their fingers and is a keyboard warrior, then you don't really give a shit, because the people I respect the most in this world don't do that. But when you think about it, it's like, when you remove having to be right and wrong, it's just a game. It's just a machine. Like, it's just a machine of creating a trading strategy. Cheeto fingers. Telling you, dog. So what's Qualcomm doing? We'll go over Qualcomm. I lost a mil on Tesla. Shit. Must need full TOS. Doesn't look like TOS Web includes volume profile. Oh, TOS Web definitely doesn't. You have to download Thinkorswim. Oh no, yeah, Thinkorswim. You have that, but it's on the web. No, you have to download the one on your computer or the phone, which you should. You're so hilarious. Appreciate you, bro. Thank you, man. I want to buy a call on Tesla right now. Am I crazy? I don't think you're crazy. I just think that if you're going to buy a call on Tesla, it should be pretty far out. We'll go over Qualcomm, Rivian, Tesla. But looking at Tesla, I think if you want to buy a call on Tesla, there is a chance that we can drop down to like 820. If you're going to buy a call, I'd go like 6 months out. But to be quite honest, I really probably wouldn't buy a call. Look at the volume profile here. Look how thin the volume profile is. If we really do give up 890, this thing will drop probably within 2 days down to 822. So that's why I'm really not a fan right now of this. So we'll see what happens. All right, let's go over Qualcomm, and then let's go over Rivian, and then we'll bounce, because I got, well, we're doing pretty good. I'm only at like 20. I'm at 32 minutes. What the hell? All right. Looking at Qualcomm, I ended up taking a position, big push up. We had some good flow that came through yesterday, or 2 days ago, I think. Good little flag forming here. Really just watching for a breakout. Stop loss will probably be set down here around 166. Still holding the position. If we end up giving up 173, I'll just take the loss. We'll see what ends up happening. But really watching for a hold on 173. And then Rivian. I'm not worried about this yet. Right, we did get a rejection. Really need to see it hold 60. If we snap 60, I'm going to have a stop loss set around 52. So we'll see what happens. The other thing, this is a pro tip here for you guys too. Sorry, I dropped my phone. Pro tip, and then we'll hop off. Because I talk so much about the same shit over and over, guys. And I know that I might sound like a broken record, but that's my goal. My goal is to hop on YouTube every single day and just drill the same stuff into your brains, because it really is that simple. You don't have to buy a fucking $10,000 course to learn this. But position sizing is key. I would always rather take a smaller position, but allow it to ride, rather than take a really high, like a $20,000-$30,000 position and set a tight stop loss. Because big money knows that, like, what you have to realize is big money can see all of your orders. They can see all of your orders. And let's just go back to snow. This is a good example. So big money can see all the orders that come through, and they know where your stop losses are set, right? So let's say that we're looking at something like Snowflake, and you were trading Snowflake back here in April 27th of 2021. Hit the thumbs up button. Thank you, BG. Yeah, if you guys can do that, that'd be really nice. Also, check out the Discord. But looking at Snow, this is a perfect example. I'm going to highlight the whole section right here. So we had a major support on, let me actually make it the opacity. I can't make the opacity any lower. Okay, whatever. So we have a good support at 232. There is a really strong support here, and big money knows that if you enter at 232, you probably have a ton of stop losses set around like 219. Maybe you have another stop loss set at like 207. Maybe the last stop losses that they see happens at 202, and then maybe there's another stop loss down here at 195, right? And let's say that you have calls that expire in like 3 weeks or something, maybe 4 weeks. What they're going to do is purposely drive the stock through the fucking ground. I'm going to get demonetized again for using the F word. And they're going to make you all hit your stop losses. They're going to force you all to stop out, and then they're going to buy up all of it at a discount, make you stop out. Do you guys know what max pain is? We'll do max pain another time, not the video game. And then they're going to completely recover it, and then look at what would have happened. So if you would have done what is traditionally correct, you would have missed out, just from your entry point all the way up at 233, you would have missed out on a 73% run over 5 months because you did what was right and you stopped out. So that's what I'm saying, is like, they know where your stops are, and they will purposely drive the stock through, kill your position, push it back up, and then it'll rally and you'll miss out. And that's why I don't really use hard stop losses. I rarely do. Normally because I have such a small position that I'm like, whatever, let's see what happens. But I rarely use hard stops. Now, if you're somebody who has never been profitable, and it's okay because not a lot of people are, right? If you're somebody who has never been profitable, or you've been trading in less than 2 years, use a hard stop loss. Because where I see everybody fail is they just can't take a loss. They just can't. Most of the time, it's not about their technical analysis skills. It's usually never about, their risk rate. It's normally just they can't take a loss, and they just hold on to shit. And that's why I recommend like nobody trades stop losses, or nobody trades options, because most of the time you're just gonna average down, and then get destroyed. Working at Ridge and Jefferson today. Let's grab a beer. Dude, I'm totally down to grab a beer sometime. All right, guys. I'm going to hop off definitely over the 15-minute mark, but whatever. I'll probably do like a weekly recap on Tesla afterwards. Check out our other YouTube channel, DeCarlo Capital. I talk a lot more about positions I'm actually taking. This is kind of turned into a Tesla channel, but that's because that's what you guys want. Do not disrespect the Cheeto fingers ever again. I feel you. Do you buy Tesla leaps on a big red day when it's 100, 200 SMA? I don't really buy leaps. Most of the time I just buy straight up normal shares. But if you don't have a lot of capital to work with, buying leaps is not a bad idea. Normally on like a 200 SMA. All right, guys, enjoy your day. Have a good weekend. Dropping some videos. Hit that like button too before we hop off. And peace, guys.